Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu, 5 o'clock in New York. It is Thursday, the 23rd day of August, 2012, and this is the daily report for gold and silver. Both gold and silver on an absolute tear this morning, utter breakout. We'll talk about that through the show. As you can see, we have broken above resistance. We're looking at gold 1670.25. That is cash market gold. High has been 1676.20 and the low 1656. Silver, not to be outdone by gold, improvement on its performance. When you take a look at the fact that gold is up about 1% today, silver is up about 2.5% today. As you can see, current print on the screen above $30 per ounce at $30.52, low 30.07, and a high just shy of $31 per ounce at $30.95. You know, traders, it's absolutely amazing how investors, analysts hang on pretty much every word, and a change in one word from the Federal Reserve of the United States can send these markets flying. And let me illustrate what I'm talking about. The statement that came out of the minutes yesterday at the FOMC meeting were specifically that they said they are ready to implement further monetary stimulus. Prior to that, they were willing to or able to. And just the change of that one word from able to or ready to ready, has really set this market on fire, because now there is a belief that there is renewed hope that there will be some sort of stimulus package, quantitative easing, whether it's out of Jackson Hole next week, whether it's in the September FOMC meeting. But the fact is that one word changed everything in terms of the way this market reacted towards it. Now, let's take a look at our basic chart that we're looking at. It is a little bit over a day. It's 555 minutes. In other words, I'm breaking it up the week basically into a couple of sections. But when we take a look at the basic resistance that we have, and of course we're pegging it from these absolute highs here. This is 1920, secondary high right in here. And as you can see, this market has clearly run away and has now begun to move to the upside. Now, what kinds of targets can we now expect now that we are witnessing this market really taking off? Well, in terms of real resistance, the next point we seriously want to look at is going to be 1700. If we take a horizontal line, I'm simply going to place it at 17. Let's move it down a little bit. What you can see when we look at that are a series of tops, or in other words, historical data points or reference points in which this market tried to take that 1700 back, failed hard, of course, and that's when we broke down to our third sets of lows, first being here, second sets of lows being here, a higher low, but then our base that we formed right in this area. Now, traders, all I've really done is converted that chart back into a weekly chart, straight candlestick format currently. If time allows, we'll go into a Henkin format. But we talked about resistance and support, and really what I want to illustrate is that we were pretty correct in assuming that we had genuine support in the area of 1581. That's at 38% retracement. It's a retracement from this shorter Fibonacci sequence that begins right in here, goes to the record top. But our long sequence, which really begins at the beginning of this rally up to our record top, when we look at the 23% retracement level, that's 1637. We've clearly passed that. But here we've got this shorter 23% retracement level, and that is at 1705. That, my friends, is what I believe to be our current realistic resistance area. I think that we predominantly have pretty much clear sailing up until then, unless we get something fundamentally different than what the analysts are factoring into this market right now, I think that we've got a real solid shot at seeing 1700 gold and seeing it. And of course, traders, not to be outdone by gold. Gold's little brother is shining so brightly, up about 2.5% today. As you can see, we talked about this over the last week or so, but yesterday, as we saw this market just thoroughly ramp through this level of $29, just below a 28.88, I believe, we looked for the next levels that if we're going to find any interim resistance in the market, we might find it in these areas. And as you can see, this is 30.53. We're looking at a Henkin-Ashi chart, and that's pretty much what we're looking at in terms of silver right now. So where do I think we're going to be headed? Well, my personal sense is we could easily get some sort of a pullback. We've had a nice little rise and then see the market play back up and play up towards this $31 area. It could also just meander straight up. There's a lot of strength in this current Henkin-Ashi chart as you look at the way that silver has taken off. And that tells me that we've got a couple of different variables that we really want to take a look at. In silver, if it starts to back off here, we had a very nice position that we put on, and we're now in good profits. We'll probably want to pull that. In gold also, when we take a look again at this chart, realize that we have seriously broken above this in many of my charts, but at the same time, we're very close. So we still could see this count 1, 2, 3. We're definitely at 4. We would get a small fifth and then get our final thrust. In other words, we want to look for signs to see if this market in any way is backing off. If it does, let's pull profits. Let the market pull back down to the bottom of this support channel right in here, and then traders, prepare yourselves for what I believe will be one of the greatest rides of your life as we witness gold and silver possibly, but gold definitely, go to new record highs on the fifth impulse wave. This has been Gary Wagner, wishing you as always good trading. We're certainly getting it this week. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.